Today I show you records of two companies. The first one came to us from another accountant. And here it is, actually. What do we have here? Here is the first sort of introductory parties, the documents that must be kept in the accounting department. These are copies of passports, copies of residence permits, and copies of documents for the company. And the second part is, in fact, the accounting itself. What do we have here? The company was opened 8 months ago, but here we have only one document. This is the annual report. The annual report in Montenegro consists of several documents: the balance sheet, the income statement, statistical analysis, notes, and the profit and loss statement. Larger companies may have other documents, but for small ones, this is how it is. So basically, that's all there is. That's what's here, and there's nothing else. There isn't a single ledger entry. That is no printed general ledger, even though according to the accounting law, the general ledger must be kept for 10 years. It means that it should be kept not on the accountant's computer, but in printed form. I know that the accountant did all this in her computer program, but it also needs to be printed out. Why do I know she did it? Because otherwise she wouldn't have been able to submit the balance sheet, and she did submit it. So she did the work, but didn't print it out. Next, there isn't a single payroll report. Again, on the tax authority's website, I can see that all the reports have been submitted, but they also need to be printed out. They also have to be kept for a certain number of years. I don't remember how many. Some documents in Montenegro are kept for 3 years, some for 5, some for 10, and some for life. I don't remember exactly how long payroll reports need to be kept, but they also have to be done. There is no employment booklet, that is a work record book. For not having an employment booklet, the fine in Montenegro is 2,500 euros. Taxes were paid from the bank account. The person was told that, taxes were paid at the post office. The person was told that opening a bank account is very difficult, so we won't bother with that and we'll just pay at the post office. This contradicts two laws. First, there is the labor law, which states that an employee's salary must be paid in this case to the company director, and it must be paid from the company's account to the employee's account. The second law concerns the prevention of illegal entrepreneurial activity, which states that taxes, salaries, and all other payments must be made from the company's account, not through some shady methods like at the post office, and there are huge fines for failing to comply with this. So, as we can see, one company has submitted well, essentially. Only one document has been filed in 8 months. The second company, we managed it from the very beginning, right from the start. Here, I set aside the documents for the last 8 months. You can see the difference in the paperwork. So there was just one document there, but here there's a whole stack. Everything is in order, just as it should be. Of course, this company has a bank account. Taxes are paid only from the bank account. Salaries are paid from the bank account. And there is also a payroll book. So let's take a look. The first document is a bank statement, and right after it comes the corresponding entry. That is the general ledger has been printed out. Next. So this person received an invoice, and it is immediately attached to the entry from the general ledger. Next, the company issued a loan, meaning the founder lent money to their own company in order to pay taxes and salaries. Here is the loan agreement, followed by the bank statement showing that the money was received. Immediately after that, the next document is the entry from the general ledger, all of it stapled together, and so on. That is, this is done for every transaction every day. When there were any transactions, they were documented in this way. That is, the document confirming the transaction is usually an invoice, a bank statement, or some other document, for example, in the case of a loan. And right after that comes the general ledger journal, meaning a printout from the general ledger. By reducing the amount of work, you can reduce the number of employees. One employee costs about salary, taxes, plus some additional expenses, well, roughly 20,000 euros per year. By keeping the accounting like this, you can cut the number of employees in half. Roughly speaking, I have one accountant handling about 70 or 80 companies. But here, for example, one accountant manages 150 companies. So by cutting the number of accountants in half, I saved 40,000. Now your service costs are completely different, and you can easily make a decent living. You earn the same amount as an accountant who works the old way, but you provide accounting services much more cheaply. These are the kinds of interesting nuances in accounting services. Goodbye, everyone.